Splendid evening it is to you viewers. Welcome to Special Focus right here on EquityAxis, your area of perspective on stock market developments and on developments in the Zimbabwean economy. I'm Ibn Mabunda. Let's go. On agenda tonight, we'll start by having a weekly roundup of events that actually took place during the course of the week. On Monday, we had a discussion about how Zimbabwe still has a forex deficit despite a 13.9% increase in its forex receipts to $6.3 billion. On Tuesday, JSE listed Tonga Hewlett, which owns a controlling stake in Hippo Valley Estates, as well as wholly owns Triangle Sugar, forecasted a loss for the year to 31 March 2019. Meanwhile, on Wednesday, ART held an annual general meeting in the capital with an optimistic perspective of reaching the sales target of about $50 million in the year 2019. Then on Thursday, we had Kafka holding an annual general meeting with a trade update that revealed the performance in the first quarter to 31 December 2018. Of note there was the fact that their forex receipts have scaled 74% with an orientation towards the forex market going forward. At the same time, Power Speed gave a trade update where they were very much bullish about the performance in the year 2019, with a new branch opening tomorrow in the capital, as well as 3 branches expected to be opened in the course of the year 2019. Very optimistic approach where that is concerned. Now, on to Friday, we have interesting developments. First of all, last night, RBZ released a statement which gives guidelines as to the performance of or the expectations of the Bureau de Change system that we have currently. As well, agro concern Border Timbers today released financial results for the 6 months to 31 December 2019. Plus, JSE listed Impala Platinum, which has interest locally in Mimosa, as well as Implats, also released financials for the half year to 31 December 2018. For conversation on these and other issues, I'm joined in studio tonight by our resident investment analyst, Anessa Jumbomo. Anessa, good evening and welcome to the platform.
Thank you, Ibn. How are you doing yourself today?
Fantastic. Can't complain. Yourself?
I'm all right, man.
Splendid. Let's get the ball rolling.
Yes.
Agro-concern Border Timbers today released financial results for the 6 months to 31 December 2019.
Yes.
Details are group revenue climbed $12.6 million compared to $10.9 million in the previous year.
Yes. Well, basically, yes, they did enjoy an increased revenue outline. But then that was much to do with their exports because the local demand wasn't very strong. But then they did mention that the export market did grow a little bit more stronger, even though they had a little bit of a subdued volumes in terms of their production. Now these guys are currently under suspension on the stock exchange, mainly to do with them having failed to release their full year results for their financial year of 2018.
Okay.
Now, that set of results hasn't necessarily been released as of late. So we're just going to have a graphical look at how they performed in the prior years, which is from 2013 to 2017.
Of notice the fact that these guys have been placed under judicial management since 2015.
Yes, Border Timbers has been under judicial management since 2015. 2015 is when the bad trend really was noticed. Before that, the last time they had a profit was in 2013, where they posted about a profit after tax of about 2.3. And then in 2014, as you can see here, they had a profit after tax loss of about 8 million, and that sort of helped them. The judicial management actually sort of helped them trim that loss down to about 4.2 million, but then thereon after it kept on going worse. There had been a couple of reports of them actually suffering some asset damages. There was a fire that did occur in Tari in one of their plots. Okay, so these guys actually boast of about a space that is worth about 47,800 hectares, okay, which then gives them an output range of about 160,000 cubic meters. So now, with that kind of output expected, we should be seeing some good numbers, especially them talking about having a firm export market in line with their half-year results for the full year, financial year of 2019. Now, as time went on, they kept on making losses. 2016, 24 million. I think this is when the fire really came in and destroyed most of their produce, and then they started coming back up in 2017. But unfortunately, there is no evidential trace of their full-year results for 2018, which is why they were actually suspended from the ZSE back in November 2018. These guys have a financial year that spans from June, from the middle of the year, which is June, up until May. So
okay, these guys are under judicial management
yes.
at this point, 2016.
Yes,
and that's 2017. They're still recording losses,
yes.
and then we're saying 2018 there are no financial results, and then they also come back and they're saying
the next time they resurface, they pretty much give us a 6-month report of between June.
But what's actually happening? I'll then question the company I'll then question Zimbabwe Asset Management Company, which is running the show at the moment. What does that mean? Are they failing to manage this?
It seems as if so, because their biggest problem is much to do with their costs. Because I mean, if you look at the numbers that they were posting, they had about $261 million as revenue in 2016, and yet they only came up with a gross profit of about 5.79 million. I mean, where the cost of production seems to be very expensive. You see, now for the 6 months that they recently reported and released results on, which they pretty much just gave us a revenue line which was at 12 million. They also complained about power outages. They also complained about a damp local demand. So it seems as if these guys are failing to really manage their resources in terms of how much they're making and how much they're actually spending on what they should, because their cost of production is evidently too big, because such a gap is
sounds a very sad story to me. I would like to say that I think management needs to do something about this concern, and we have a different story.
Yeah, it will be a worse off position, especially.
Let's talk about Impala Platinum. Yesterday they released financials for the 6 months to 31 December 2018. Headline profit of 2.3 billion rand for the 6 months ended 31 December 2018, compared to losses of $150 million in the previous comparable period. Quite a positive. By the way, these guys have interest in Mimosa as well as Implats.
Yes.
Quite a positive for them.
Yes. It is a positive, but then for us just to have a better appreciation of them, I think we should just zoom in on Implats itself, because these guys are one of the biggest platinum miners in Zimbabwe currently. Now, what we have here is a graphical representation of the 4 E elements that come from mainly trying to mine platinum. Now, the 4 E elements, you would find your platinum, your palladium, your gold, and your rhodium. And then within those elements, within the produce that they get from mining all of these elements, there are then extra elements that do come out of extra metals, soft metals, your nickels, your iridiums, and the like, that then come out as a byproduct of actually mining platinum. Now, as you can see right now, we have somewhat of a rally in terms of palladium, which is their second biggest element that is actually found within their mines.
The biggest, of course, being platinum, isn't it?
Yes, exactly. Now, palladium has almost the same percentage in terms of production levels. 35%, almost matching platinum at 35% as well. But then they have a couple of hundred ounces that do separate the two. Platinum does produce about 49,000 ounces per quarter, according to their last quarterly report, and then palladium has produced about 48,000 ounces according to the last quarterly report.
Okay, I know we've talked about platinum, how Zimbabwe is home to the world's second largest platinum reserves.
Yes.
But of particular interest to me would be palladium.
Yes.
There has been a lot of talk about palladium. I mean, of course, there has also been talk about nickel and that. But there is of particular interest the fact that the price of palladium over the past few weeks, perhaps into months, has
Yes.
been quite interesting. We've seen the metal actually strengthen in terms of the price.
Yes.
Just to give you a bit of background, comparing the progression of the price of palladium over 5 years, right? Looking at May, we're coming from about just over 700, 750, thereabout. We get on to 2016. We're talking about a price of just below $500
yes.
per ounce. That is. Then into September, there we see,
17, yes.
we see about a price of about 1,100, right? Then it dips again in 2018, but then we have a sharp scale right up to 1,548, which is the price that the metal is actually trading at this present moment.
Yes.
Well, you'd find that this very same metal is a variety of applications used in the electronics industry. It's also used in fuels. You know, there's been a lot of green talk around the world, even at UN level. They're talking about how there's need for green technology. So that has actually been the cause of the strengthening prices. Remember that we had a German manufacturer a few years back where they had actually to recall the vehicles because the usage of the vehicle in terms of the fuel efficiency was not up to scratch.
Yes.
So the corporates at the moment, they're actually very much keen on seeing to it that they adhere to the global standards that have been set.
Yes.
And palladium, just like nickel, is right at the center of that. Electric vehicles, also talking about how there is need for efficiency in terms of the fuel usage. In that.
Even catalytic being used as catalytic converters. Now, in the motor industry, those converters are very important because we are pretty much oil-based fuel industry, where we talk about vehicles using your diesel, your petrol. Now, catalytic converters actually are used to change your carbon monoxide out and let it come out as carbon dioxide, which then brings out the issue of the whole drive about going green and trying to reduce the speed of global warming. Now, this is what I want you to notice from that small statement right there. Now, around 2014, 2015, we started talking about going green, and as time went on, the drive kept on really pushing. A lot of pressure groups really came in and like, no, you know what? We need less vehicles on the road. We need cleaner vehicles on the road. This is when your Teslas started really thinking around electrical vehicles and coming up with new cleaner fuels that they could use for their vehicles. Now, as time went on, it seemed as if that push was really now pushing up prices to do with palladium, because that is another element that can be used, not forgetting platinum as well. Now, the price started scaling up because of the demand that was now growing. It took a little bit of knock around about here. Okay. I think there were. It seemed as if things had gone a little bit quiet. There were now issues to do with whether the UN was going to put a goal in terms of when we should really start talking about having the whole world actually move to cleaner fuels and have a global warming initiative really running throughout the globe. With that being said, the laws were passed, standards were passed, and the price really started scaling up again. Okay. Which is what we see here now. Now your UK's your China has already had a lot of electrical vehicle production happening. I know in Japan they have close to about 70,000 electrical vehicle charging points that they can actually use. So you can see that the move around that spectrum is really growing big. And now the supply for palladium has been very low. Okay. Now, because of that supply gap, we then find the price scaling up,
strengthening
even higher than gold, because gold is currently sailing between 1,300 and 1,350 thereabout, not going even beyond 1,400. So you see the importance of palladium right now in terms of the Going Green initiative has really pushed their prices up.
You mentioned supply there. Let's have a look at the output figures that we have at the moment. Russia is topping the production list. This details from 2012 right up until 2017.
Yes.
The 18 figures are not out yet. But if you look at Russia, they're leaders there, then followed by South Africa, Canada, the United States, and we are number 5. Okay.
Yes.
So
even though being the second largest deposit of platinum in the world,
right?
This really shows me the gap in terms of mechanization and exploration of our reserves.
To me, that would speak of potential. So it means we've got actually potential in this regard.
A lot.
Just to look at how Zimbabwe has performed, Zimbabwe is coming from a position of 9 tons for the full year, 2012, then 10.1, that's 2014. Then as for 2017, we produced 12 tons of palladium. But if we could actually scale up our production and invest more, we could actually make more and make use of the strengthening price that we're actually having. Because 1,500, there are chances that that upward trajectory will be maintained. And so if we could improve from there and bit a couple of these guys and get to a better position, we could definitely improve.
Definitely, because obviously we could produce more than Canada and the United States if the government really pushes our mining industry to actually really push these kind of good production numbers. It is a little bit satisfying that our numbers have been going up, not much to do with the reduction, except for your 2015 and 16, where it was very stable. But then I'm really happy that there has been somewhat of an uptick from over the 5 years. But I think for me, if any one of our viewers right now would be asking the question, okay, these guys are really pushing for a go green kind of initiative, but then we in Africa now out then answer them that we still have an opportunity to actually service most motor vehicles in Africa, because there's not a lot of electrical vehicle usage in Africa currently. So we still have the opportunity to also tap into the catalytic converters space, because of how Africa is still set up. I don't think that we're going to have electrical vehicles coming into our space in as much as 10 to 15 or even 20 years going forward. So we have got a space of about 20 years to exploit such kind of an industry. I'm sure Russia has been enjoying those kind of numbers. South Africa really pushes their mining industry because they know that the economy pretty much survives on mining.
Wait a minute, Aneso. What then happens to Zimbabwe in the event that there's been this trend of fuel being the trend right now looks as though we're headed for the elimination of fuel and the introduction of electric cars. That means batteries. So what happens to Zimbabwe?
Well, it's not so much of a doom for us, because as you do know that electrical vehicles do need batteries, and batteries do need a couple of elements that we actually already mine. You've got your nickel, you've got your cobalt, you've got your copper. Those elements, they're readily available in Zimbabwe. Okay. Even platinum and palladium is still going to be pretty much useful in those electrical vehicles, because some vehicle manufacturers are going to be looking for lighter metals for them to make their vehicles. Because in Europe they're very keen and very egocentric in terms of how fast their cars go. This is why they have the autobahn and the like. So lighter metals actually do give them space to actually build more of such kind of cars that are using very, very much clean energy, which is your electricity. And because of the electricity being needing your nickels and your copper and your cobalt, we still have a very good space in terms of our mining area. So Zim is pretty much sitting pretty in terms of our potential, but not our actuality.
Okay, I'm sure we can expect positives going forward.
Yes, we should.
Okay, on to the RBZ. Yesterday they. In a tweet, issued a statement which gave, which was called Operational Guidelines for Bureau de Change. Now, there's a list of requirements. Among them, one is a capital requirement of 15,000 US dollars, not RTGS, US dollars.
Yes.
Then, if you wish to trade there, you should have demonstrate an ability to install a robust computer system. Then, thirdly, you are authorized to sell forex of up to $10,000 per day. Of course, this has been spelled out before. It's more like a repetition. Then, a daily aggregate float limit of not more than $20,000. What do you think the RBZ is trying to achieve through these?
Well, basically, they're really putting a very tight grip on the forex market and making sure that we don't have a black market as well in the country, because the long arm of the law is going to really be chasing these small boys who are on the street. Now, why am I saying small boys? If they're really looking for a capital outlay of about 15,000 US dollars, that means a lot of the guys who are trading in foreign currency currently are going to be pushed out of the market, which then leaves the guys that can actually afford having a bureau de change. Now, after the 15,000, they need them to have a float which is not more than 20,000, if I heard you correctly.
Correct.
Now, if they have more than 20,000, that means the liquidity of US dollars in the of potential US dollar market is going to be too high. So they need to also make sure that the availability of US dollars is limited. Yes, it is also contained. So by having a small number of bureau de changes, by making sure that they have a capital outlay of 15,000.
Yeah, because that's a high figure. So definitely they're trying to push out the smaller players. They don't want the guys migrating from the black market.
Yes, and having 10,000 bureau de changes opening up on the street at one go. So if we have a limited number of suppliers in terms of the bureau de change because of the elimination through the 15,000 capital outlay, and then limit their float to a maximum of 20,000, that means that we have pretty much contained the liquidity of the US dollar in terms of the foreign currency market.
Hold on, Aniso. How profitable is it to engage in this sort of trade? High startup cost, 15,000 US dollars, not RTGS dollars, right?
Yes.
Then ceiling, you cannot sell beyond 10,000 US dollars per day.
Yes.
And then the parameters, you cannot lag behind in terms of your pricing by more than 2.5%, and you cannot charge above 2.5%. Okay, those are the parameters. Is it profitable? Is it lucrative for any trader to engage in the form of?
It's very stringent, which gives the government the room and the space to actually just stay with their banks that are registered commercial banks to actually trade, and they can control those guys a little bit more. Now, the 2.5% above or below the exchange rate is actually according to law, and they can actually get arrested if they trade anything above that. Now, with the limits that they've been put in, where they have to only trade about $10,000 or less, that means they really can't push volumes for them to make a sensible profit on a daily basis, even on a monthly basis. So now the 10,000 has limited their volumes, which makes them very much incapacitated to actually make a profit from the small margins that they have to deviate from the current exchange rate. If they sell anything less, they are not going to make any profit in terms of pushing volumes, because if they were going to sell at a 2.5% less than the exchange rate, we could talk about them pushing volumes, but then they only have $10,000 to work with on a daily basis, and then they are not allowed to have more than $20,000 in terms of the float. Now, with not being allowed to have more than $20,000 as their float, that makes them very, very much illiquid, which can push the market to have a very strong currency, a very strong exchange rate. Now, the exchange rate will then still remain around about the 2.5 rate, that the interbank rate that has been currently being floated as of late. Now, I would like to say that this is pretty much a semi-fixed exchange rate. I would have really loved for these guys to let it really have free play as to what the market really wants, because it's a willing buyer, willing seller that is being set by the bank. If the bank doesn't want to sell to you at a much better price, then they will just tell you, then I'm not a willing seller, and you.
To me, that spells two things, Anesu. First of all, this means that the black market is still going to thrive. Because if these measures had been a little bit relaxed,
no, definitely.
This could have meant maybe 2 or 3 traders teaming up to come up with the capital, then get into business. So as it stands, this means the black market traders are going to
are still going to be smiling to the bank.
It's a luta continua for them. It's business as usual for the black market traders. Of course, this has had an effect on them in terms of their pricing as well as the exchange rate. Okay, so we're likely to see the black market continue. Secondly, this does not spell a positive in terms of our trade balance position. Why? Because 1:2.5 is too high of a figure. And the rand is at about 14, 15, 1:15 against the dollar. That has been pretty much the margin.
You
talk about
which still makes our local products a little bit more expensive.
Exactly.
For those who would want to export it. Yes.
Right. So that this means that in terms of our exports, in terms of our local products, well, we were likely not to see a growth in terms of the exports, which again takes us back to a position where 2017, $1.7 billion in trade deficit.
2.5 billion in 2018.
Yes. Who knows where we're going to be in 2019. It doesn't look like that position could actually improve.
Yes.
I mean, we could go on and on where that is concerned.
I don't think it's going to improve, because they still need to also make sure that they boost those the high foreign currency earners. As of late, we did talk about this. I think it was in the week where the deputy minister was mentioning that they only have received about 20 kgs of gold deposits.
The mines team.
Yes.
And yesterday I had a conversation with the former Minister of Finance, Dr. Simba Makoni. He says, look, let's not fix this thing. Let's let it float. Because my argument to him was, do you have enough foreign currency to actually back it up? But, well, that's another story. On to the stock market. How did the stocks perform today?
All right. Today was pretty much of a green day, coming from a very, very damp week. Monday through Thursday, it was very on the low end of things, which almost spelled a negative year to date for most of our indices. The mining's index is still in the negative on a year to date basis. The all share index and the industrial index did mimic each other by coming up 0.21%. For both of them to settle at 148.42 points and 495.37 points.
We haven't seen greens in days, eh?
Yeah, we haven't seen greens in days. It was pretty much of a bloodbath. Now, the top 10 index added just a minimal of 0.05%. That's pretty much consequent to the push coming from Old Mutual that added 2.53% in the respective index, with Padenga adding 0.86%. It seems like it was a positive day for these guys as well, because they had been on the red also for the past 3 trading sessions. Citco added 0.51% and Cassava as well as 0.15%. Now, Econet and Delta were the only stocks in the top 10 index to actually come off today. But then the scale back was pretty much minimal. Now, if we look at our rises and fallers, you've got your Unifreight. These guys are pretty much into logistics. They have added about 20.05% for them to settle at 9.94 cents, while Exia added 7.5% to settle at 43 cents. Now, the worst performer of the day was your Econet that came off 0.74%. Nampak, these guys are pretty much into your packaging materials. They do package for Pizza in pretty much in score. They do package for your TSL.
Bread, they're everywhere.
Yeah, pretty much everywhere. Delta is also a partner of theirs. Now they came off 0.17%. Delta and Hippo dropped 0.06 and 0.01% for both of those countries to settle at 274.84 cents and 171 cents. And then if we just look at our 5-day trend, Like I mentioned earlier on, that it was pretty much of a bloodbath throughout the week. Our graphical explanation right there does show us that pretty much on a day-on-day basis we had been coming off for almost every index on this graph here, where we then had to settle at a 2.47% negative in terms of our all-share index on a 5-day trend, coming from as high as 152.18 points to 148.42. That was recorded today. Same goes for your industrials that settled at 2.42% on a 5-day trend.
Okay, going forward, Daniel, so what could we expect from these companies? We've been to ART on Wednesday. The general sentiment there is we want to see how the MPS actually delivers and how things work out on the inter bank trade. Thursday we were at Kafka as well as Power Speed. Same statement. Everybody is not certain of what actually is going to transpire. So what can you expect from the stock markets going forward?
I'll say that if going forward, there needs to be more knowledge as to how the market is really going to react in terms of what the MPS has presented to the nation. Now, most of these companies are really crying foul about the 30-day moratorium that has to do with them actually having to spend their export receipts within 30 days. Now, as I was talking to the ART CFO, Abisai, he did mention that the 30-day period puts them in a space where they cannot have any savings in terms of foreign currency, and savings are pretty much critical for any business. And I'm sure that then puts that complaint then pretty much goes across the whole board of the stock exchange. Now, if that was a little bit different, then we could expect a little bit more of capital expenditure going into play, because 30-day period spells
what does that mean for the investor?
Stock management.
Quickly before we go, what does this mean for the investor? Is in terms of investor confidence, are we likely to see an upward trend, downward trend, constant?
Well, these guys also did mention that they've been experiencing damp demand, which is pretty much to do with the inflation right there. Our purchasing power has not been very effective, especially considering that our salaries haven't pretty much changed for most companies in the country. So in terms of their revenues, the demand coming off may be spurred by the increase in their prices. Other than that, it may be very much stable and a little bit turbulent on the negative side going forward. Because if the foreign currency market then begins to thrive a lot, you would notice that a lot of foreign investors on the stock market would start pulling out most of their stocks for them to dive into the foreign currency market.
Okay. Thank you, Anesu, and thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.EquityAxis.net. Good evening.